And good afternoon, everybody. Thank you for joining today's 5-minute Brainstorm, our weekly Wednesday webinar. I'm Chris Orestes. It's a pleasure to have you once again. This week, we're going to talk about taxes that people owe on Social Security benefits. It's an area that many people are surprised to find out that once they start taking Social Security benefits, they end up owing taxes, and they've made years of paying into Social Security through their payroll taxes, and based on their income tax, their income level, when they start taking Social Security, they can start owing taxes. So the problem for so many people that don't realize this as they're going into Social Security is they start making income assumptions, budget assumptions, with a gross number in mind of what their income is without realizing there's a potential haircut they're going to take in their Social Security by actually paying taxes and ending up with a net number. So for a lot of people, that can come as a big surprise to their budget. And what I want to do is spend a few minutes going through how Social Security income taxes can work. Now, first of all, if a person is relying solely on Social Security, that's their only income, and their income's under $25,000 a year from that or a combination of that and other, they're not going to owe taxes. There's a floor for where you would be to owe taxes, but based on where you are above that, you can start to get into some tax issues. Now, when that is the case, if you are looking at owing taxes, then you're going to end up in the range of paying taxes on somewhere between 50% and 85% of the Social Security benefit that you're collecting. Now, for a person who continues to work, this is sort of another tax on Social Security. If they're collecting Social Security and or taking Medicare benefits, they're still subject to withholding from their paychecks or their self-employment income. So even though you're collecting Social Security or Medicare, if you're generating an income through employment or self-employment, you're still going to be paying into the system. And then on top of that, you might be paying income tax on the Social Security benefit that you're collecting. So if and how much a person's going to pay in Social Security benefit is really going to depend on their combined income. And the combined income calculation is going to be 50% of the Social Security benefit collected for the year, plus your adjusted gross income and your tax-exempt interest income. Those together are your combined income calculation to determine where you are on whether or not you're going to pay income taxes on your Social Security benefit. So for a person who's filing individually, like I said, if they're at $25,000 or less, they're not going to have to worry about paying a Social Security tax. But if that combined income range is above $25,000 to $34,000, now you're in the range of paying up to 50% of the Social Security benefit tax, and you're paying at ordinary income rates. And if you're above $34,000 of combined income, now you're in the neighborhood of paying up to 85% on the Social Security benefit that you're collecting. If you're filing jointly, the numbers obviously increase. Now it's 32,000 and below is exempt of taxation. But if you're between 32,000 and 44,000, now you're in the up to 50% club. And if you're above 44,000, you're in the up to 85% club. So all Social Security recipients need to continue filing their tax returns, even if it's their only income. And part of the reason is there's things like the COVID benefits that have been distributed to anybody who's on Social Security, but they also look at income tax returns as well to keep track of people and keep registered in the system as to what kind of income people are collecting from year to year. Any taxes that somebody would be paying on Social Security, there's a couple of ways that that's handled. Either you're going to pay it in full by April 15th, as you would normally would with any owed income taxes, or Social Security can deduct it from the benefit over the course of the next year. And then people have the option to select either 7%, 10%, 15%, or 25%, deducted from their monthly Social Security benefit until they've paid their outstanding tax amount in full. So that's an important thing to keep in mind for you and with your clients, that don't assume that your income plus your Social Security benefit equals your net monthly income and can cover that budget. You've got to understand if somebody's going to be in the crosshairs of paying taxes on their Social Security, to understand what their true net Social Security benefit is if they're hitting those tax criteria. So thank you so much for joining today's 5-minute brainstorm. It's a pleasure every week to share with you a quick piece of information. I'm Chris Orestes. Look forward to seeing you again during next Wednesday's 5-minute brainstorm, our weekly Wednesday webinar, every week, 3 o'clock Eastern time. Thank you so much.